This assignment will follow up on the video and the questions that you had yesterday. On the screen is the general ledger for the corner grocery store, and we looked at the parts of these ledger pages yesterday. For this assignment, you will also need the journal page for the corner grocery store. Hopefully you were able to open it and print it as directed on your course page. You will need to have that journal page in front of you as we do this assignment. If you remember, you did this journalizing for this particular problem for the corner grocery store back in topic 4, and now I will demonstrate how we actually post from the journal to the ledger. So we will go through each of these transactions. Before we begin, I want to call your attention to the tabs at the bottom of the page. If you look down here, I have this tab clicked on so you can see the asset accounts for this particular business. The next tab is for liabilities, and if I click that, you'll see the liability accounts, and then you have the owner's equity, the revenue, and the expenses. So all of these are similar to what we looked at yesterday. Let's begin with the journal. If you look at the journal page for the corner grocery store, one thing to point out at the top right hand part of that journal page, you see that it's labeled page 2. This is page 2 in the general journal. We'll come to that in just a few moments, but that's one addition to this particular journal page. But let's look at the first entry there, dated February 1st, 2018, and we'll look at posting this. So the first account you see there is cash debited, so we go to the cash account. So on the ledger on your screen, we go to this account, the cash account, and we will post this entry. We put, first of all, the date that's in the journal, so 2/1/18, and the column that's entitled description is not really used very often. If the transaction is very unusual or there is some particular information that needs to be recorded, it would be used, but typically this column is not used. The reference column we'll come back to in just a moment, but first of all, back on the journal page, we saw that cash was debited. We received an asset of cash, so it increased, so we debit in the journal $2,500, and we do the same thing in the ledger, $2,500. Whoops. There we go. And now in the reference column, this J1 up here, as I mentioned yesterday, stands for journal page 1. That's where the 12,300 came from. Now, where did the 2,500 come from? Well, it came from the journal page 2. So we put J2. So if there's a need to go back and see where in the journal this information came from, we can tell in the reference column. Now, the last step in the posting is to go back to your journal. You don't see it on the screen, but hopefully you have it in front of you. There's also a reference column in the journal, and on the same line as cash, in that little reference column, you put 101. Back in the ledger, you see that cash is account number 101. So we use that account number in the reference column on the same line as cash in the journal. So the first part of the entry has been recorded. Second part, next line says sales is credited by 2,500. And back in your ledger, if I go down to the tabs and click on the revenue account, now I have sales. As I mentioned yesterday, there's nothing in it, and we'll explain why it's empty later, but right now there's nothing in it for this month of February. So we put the date, and again, it is February 1, 2018, nothing in the description column, and the credit, according to the journal, was $2,500. So once again, we made sales. Sales is a revenue account. Revenues increase on the credit side. And the final thing in the ledger is to put J2 for the journal page. Now, this account is 401. So in your journal, you would, in the reference column on the same line of sales, put account number 401. That tells anybody looking at this journal that this indeed has been posted. So a simple process. Let's do the next one. February 1st again, in the journal, you see accounts receivable is debited. We know that is an asset account. So I will click at the bottom and go to my assets, find accounts receivable, and put in the date. Again, it's February 1. And the debit is $1,200. It's debited because accounts receivable increased. We have customers who bought something and they charged it, so they owe us more money. We talked yesterday a little bit about sub-ledgers that would tell me who these customers are. Maybe it's one person, maybe it's more than one. So $1,200 is debited, and that account is going up. And again, it came from journal page 2. Whoops. There we go. And this is account 102. Back in the journal, I would put 102 in the journal in the same line as accounts receivable. Once again, sales is credited. And the amount is $1,200. So we made 2 sales so far this month, and they've both increased that account. So we have $3,700 so far in sales. Reference is J2, journal page 2, and the account 401 goes into the journal on the same line as sales, same as we did in the previous entry. February 2nd, we debited electricity expense. That's obviously an expense account. I go to electricity. These expense accounts also are empty, and we'll talk more about that later. The first expense paid this month is electricity, and that's on February 2nd. And expenses typically are debited. It went up. We paid more money for electricity, $98.50. And the reference column, again, is J2. This all comes from journal page 2. The account here is 501, and back in the journal I would put in the reference column 501 on the same line as electricity expense. And we're spending cash, so we go back to the asset part of the ledger, find cash, and enter that posting. And we spent money this time, $98.50. So cash goes down. The reference is journal page 2. So we have 2 increases to cash so far, and we have 1 decrease of credit because we spent some money. Again, 101 is the account number. It goes back in the journal on the same line there as cash for February 2nd. February 3rd is a debit to accounts payable. Accounts payable, as you know, is a liability. So let's go to that account. And that account, according to the journal, is debited by $500, which means for a liability, a debit means it went down. So we're paying part of what we owe. Actually, we're paying the whole thing. This can tell us on January 31st, we owed $500. Now we paid $500, so we've paid off what we owed. And that can be referenced back to journal page 2. So now accounts payable is 0, which is always a good thing. Account 201 goes back into the journal on the same line as accounts payable, and we paid cash. Once again, we go to the cash account under assets, put in the date, and we spent money. We paid a bill, so we credit $500. Our cash account went down a little bit. Reference back to journal page 2. And again, the cash 101 number goes back into the journal on that same line of cash on February 3rd. February 6th, we debited office equipment. This is also an asset over here, and it is debited. The date, February 6th. Debited by 1,000. And the reference is J2. And this account number is 104. That would go back into the journal on the same line as office equipment. So now we have more office equipment. We can see 2 debits, both increases, and we have more money tied up in office equipment. We pay cash for this. Again, back to cash. And cash has to go down because we spent some money. And again, J2. And once again, account number 101 goes back into the journal. February 7th, inventory. We purchased inventory. And that amount is $6,000 from the journal. So inventory goes up. Reference is J2. And this number 103 goes back into the journal on the same line as inventory. And we didn't pay cash this time, so we don't credit cash. But according to the journal, we credit accounts payable. So we charged it. So we go to liabilities, find accounts payable, put in the date, and now we owe more money. We had the 500 paid off, it was down to 0, but now we owe 6,000 because we just bought some inventory. And that's referenced back to, once again, J2. Okay, and this account, 201, account number goes on the same line as accounts payable in the February 7th transaction. Last one, let's do telephone expense. Let's go to the expense accounts, find telephone expense, and this is February 8th. And expenses are typically debited, so it goes up. We spent more money on this expense for this month, $123.25, and it came from journal page 2, and that account number 502 would go to the journal on the same line as phone expense. Okay, and then that was a cash transaction. We paid cash for our phone bill, so we put in the date. And a credit of $123.25 because we spent money. And again, the J2 came from journal page 2. Okay, so those are the transactions from the corner grocery store up through February 8th, and that's the process of posting. And in this particular business, as in many businesses, there are a lot of entries under cash. Cash goes up, cash goes down, and you see that happening a lot. You see that accounts receivable went up. People have not paid us yet for these bills that they owe us, but we assume that they will. Liabilities, we've got some increases and a decrease. So this is the process that we follow in the process of taking the information from the journal into the ledger. At this point, I'd ask you, as part of this assignment, there are some questions to answer, so do that at this time.